Welcome back to another video by NTA. Please like, comment, and subscribe. I greatly appreciate it. And with that being said, let's get into the video. Now, we had this massive red day on Tesla. I mean, honestly, not as red as it could have been, but it was pretty gnarly, especially if you weren't paying attention to the last video. Now, while my bias was bullish on the last video, I did go over a couple bearish scenarios, and one of which did play out today. If you don't believe me, go ahead and check out the last video. I'll pin it up on the top right. But I have to move to a smaller time frame to really show you this. Let's go to the 5-minute. So at open, today was the 21st, Friday. We opened in the middle of this range that I've been talking about, this area of consolidation that we've been in since Thursday of last week. Of course, we broke out of it this week just to fall back into it. And what did we do today? We fell below it. And we fell below it. We came up, retested it, and it continued to fall. Now, another interesting thing that happened was if I open up this descending channel that I've been talking about a lot for the past couple of days, the one that we broke out, when we broke out of this area of consolidation, where did we find our support when we broke out of this zone here? We found some support here, but ultimately we fell back in and we retested the upper bound, fell back in, and I mean, on a smaller time frame, we did end outside of it. When it comes to structures like this, when it comes to any kind of line or trend line, channel, supply, demand, whatever you want to call it, I do not like looking at it as just a solid line in the sand. Now, when we're talking about like stop losses or take profits, if you're running, if you're trading like that, then yeah, of course, it has to be a solid line in the sand. But these are areas, right? And, I've been tricked by drawing a support or resistance in the past, see price wick off of it, and I tell myself, hey, there's a reversal right here, only for my thesis to play out for 10, 15 minutes, and then price turns back around and breaks through the resistance or drops below the support. So you kind of have to look at areas like this as general areas. You can't look at it as just a solid line like, oh, look, price respected it. We closed outside of it on the 5-minute. It doesn't necessarily work like that. I'll look at it as a region, and, some people would say that we invalidated this breakout. If we look at the daily chart, let's see, if we look at the daily chart, we technically did invalidate this. Now, the one thing that I'll say is, come Monday, we need to see an open and a close back within this area to invalidate this breakout that we had on Wednesday. Now, I had a bullish bias on last video. I did cover the scenario, the bearish scenario, which did play out today. I don't like to be too biased, but obviously, I've kind of had a bullish bias, and I actually still do. Let me show you something. If we draw out our fib retracement, and I've been drawing the range from here, that's been the last significant high in this range. Technically, we're not really gonna fall to the floor until we break this level right here. Our double bottom level, if that's how you want to look at it. And, that would be at 325.10. No, I know what you're saying. It's like, look, we fell from here to here. We came up, had our little dead cat bounce. We tested the 382 fib level. And now we're just going to fall down and have a continuation to the downside. And yeah, certainly possible. I totally agree with that. But this is almost kind of like you don't want to buy your puts at the bottom of the range. You want to buy it at a place where there's more optimal risk reward. So let me show you a different version of this, one that you'll agree with more. And obviously, this is the past, and we could kind of have our confirmation bias about the past and stuff like this. But my point is, you don't want to buy puts at the bottom of the range. And you don't want to buy calls at the top of the range, or near the top or near the bottom. Yeah, it does work out sometimes, but it's not going to work out as many times. It's not going to be over 50%. It's unless you're like really good at determining when a trend is going to continue, and no one should say that because you're not a fortune teller. You can't read the future. Anyway, with all that rambling aside, let me show you kind of my point in the other direction. Let's pretend that we're looking at calls. So you could see in this range here, we shot up all the way from at the bottom of the range. The low is 326.59, and the top was 488.54. And you could say, look, we shot up, we came down, we tested the 382 level, the Fibonacci, and now we're breaking out. But what happened? We didn't make it past the midline of the last fib level or fib zone. We ended up reversing and we fell even lower. Sometimes price does come down to this level here and it does continue higher, but we never got confirmation in this case. We never broke out of the top of the range. We never came back and retested it or consolidated it above it, and then we never broke out. I'm not here telling you that this is definitely a bear trap. Don't let anyone ever tell you what something is and isn't in this market. Otherwise, they're just lying to you, or they are a legitimate fortune teller. But my case in point is you don't want to buy puts at the bottom of the range. You want some kind of confirmation that price is going to move lower. And, you know, if you really do believe that we're going to continue moving lower, then my suggestion to you would be to look at this structure here. So if you're looking for more continuation lower, there's a couple levels that you should be on the lookout for. One would obviously be this local low, which was at 325.10, and then also if I would observe this structure and see if price respects this structure. So if we move to a smaller time frame, because these are going to be for the most part intraday kind of trades. I think we're too close. We're pretty much right on top of the 100-day simple moving average again. So I wouldn't be surprised if price did reverse on Monday to the upside. I'm not going to say how high we're going, but if we do reverse to the upside, my personal bias is up in this range here from about 377 to 385. If you're looking for continuation down lower, the two areas you're going to want to look out for is the lower bound of this structure and then this area here, the local low at 325.10. Watch how price respects these levels. If we open up somewhere around the middle of this range and we fall below, come back up, retest, and then break this level, come back up, retest, that's a possible scenario. For me, I'm a little wary taking a bearish type of trade, a short position here, just because if we do break this level, we got this level right below it, not too far below it. From today's close, it is $17. Actually, sorry, $12. But for me, it's just not worth the risk. We don't necessarily have to come and, you know, make a little W type of shape here. Again, if that's your kind of a thing. Personally, I am still biased to the upside for the short term. But everyone right now on YouTube is screaming, you know, Tesla's going to dump. If you're looking for it to dump, you know, at least try to find some confirmation. Don't just spam puts on Monday. I'd give it probably a 25% chance that it works out for you. And obviously, you know, that's not a winning percentage. You want some anywhere above 50% unless you're really good at managing your risk. But it is possible. It is possible that we violate this level and we have a big move down. Because at the end of the day, all it takes is one real bad news story, one wrong gesture at a little press conference, and, you know, everybody's losing their minds. We're at a potentially pivotal point for at least a short term. You know, I say short term because if we do reverse and move back up, I don't think we have too much more gas in the tank to keep moving up before we need a deeper retracement. However, again, there's so many ways of looking at this chart right now. If we zoom way further out, the low of this massive move that we had up here. Now this is a very big range. You have a lot of local highs, local lows, local highs, local lows. We are in a pretty deep retracement from this move up here. In fact, we're not quite in the gold pocket, but I think we're in a good spot where we need a decent relief bounce. And that has some confluence to this little region that I drew here. What is it? 377 to 385. So far, we've tested the 100-day simple moving average twice. If we fail below it here, then yeah, I think we definitely at least get down here. I know that's not that much further below this level, but it is almost $10. What is that? $8. Yeah, just watch the structure here and watch this level here if you're looking for more downside. But that being said, I think downside in the short term is fairly limited. I do believe eventually we're going to have to catch up to the 200-day SMA. Whether it happens like this or if it happens like that, eventually we are going to catch up to it. I mean, let me know your thoughts down below. Could you have used my levels, or will you use my levels? Again, non-biased, just observing the price action, observing these levels that I'm providing. Do you think you can use these to make some profit? I did today using this, so I know I was super biased to the upside, but that's not how trading works. You have to observe the price action. And when we opened up in this area of consolidation, I didn't take a trade until I had a pretty solid idea of what direction we were going in. And yeah, it is crappy that we moved down today. I do think it's potentially a bear trap, but I saw it for what it was. I saw this move down. I saw the retest of this area, and then I didn't take the trade until probably about like right here. I don't remember exactly when, but when I really felt it, it was on this wick right here. That's really when I felt that, and that's when I decided to take it. And ultimately, all I was really targeting was, let me close this other one out. The only area I was really targeting is whenever price moved back to test the top of this channel. And yeah, I didn't get a super big move. I got probably from about like 345 down to 340, but $5 is not bad for a put option expiring on a Friday. Now that is pretty risky. I'm not giving any financial advice. I'm not telling you to take any trade setups the way that I did. You have to be able to manage your risk. I'm not here to tell you what trades to take exactly or how to do it. I'm just telling you what I did. Regardless, what I saw going on in the price, even though it goes against my bias, I went with what price was telling me. So yeah, I mean that's going to do it for the video. Again, please like, comment, and subscribe. I greatly appreciate it, and I'll catch you in the next one.